Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of LVMH, Moët Hennessy Louis Vuitton, which is one of the best known companies in the entire world. Currently, their American listed shares are trading for $144.88 per share. Over the last year, their stock price is down 12%. Going back 5 years, LVMH has compounded at a rate of 20% annually. Over 10 years, they're compounding at a rate of 15% annually. And going back prior to the global financial crisis, LVMH has had their stock price compound at a rate of 13.5% annually. Keep in mind that this is not including their dividend payouts over this time, and currently they have about a 1.7% dividend yield. LVMH is trading pretty snugly between their 52-week high and their 52-week low. They are an extremely large business. They have a market cap of nearly 350 billion euros, which right now equates to about 362 billion US dollars. For more background about the business, LVMH is a global producer and distributor of luxury goods. It operates 6 segments: fashion and leather goods, which is its largest and oldest segment, watches and jewelry, wines and spirits, perfumes and cosmetics, select retailing, which includes Sephora and airport duty-free retailer DFS, and other, which includes their publishing. Higher profile brands include Louis Vuitton, Bulgari, Fendi, Givenchy, Tag Heuer, Hennessy, Moët and Chandon, Glenmorangie, Sephora, and Benefit. LVMH operates nearly 5,000 stores globally. It was incorporated in 1923 and is headquartered in Paris, France. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of LVMH based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public. It will continue to improve and get better over time. So with that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over the last 5 years to be above 14%. So there are a couple of reasons for this. The first is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns, and these business returns are going to be captured here by return on capital. The second is that the average publicly listed business earns about a 7% return on capital. So by looking for a benchmark of 14% or higher here, we can potentially build in some margin of safety for ourselves based off the overall quality of the business being about twice as good as average. LVMH has produced solid returns on capital that have primarily been in the teens over the past 5 years. They dipped down to about a 10% return on capital during 2020 when a lot of their stores were closed globally due to the COVID-19 pandemic lockdowns. Since then, they've rebounded quite well. They ended 2021 with 19% returns on capital, and over their last 12 months, they're earning about 20.5% returns on capital. Averaged out over this time, LVMH is earning about 17% average returns on capital in a given year. So that's a few percentage points above the 14% mark we're looking for, and so this is a check to start things off on metric number 1. Metric number 2, here we're taking a high-level overview of the cash coming into their business. We're looking for revenue, earnings, and free cash flow growth over the last 5 years, and we'll also be including their last 12 months worth of numbers. This metric is all or nothing in nature, meaning that either all 3 of these are going to be up for a check, or if even one of them is down, this entire metric will be an X. So over this time, LVMH has grown their revenues by nearly 50%. Their earnings have also more than doubled, and their free cash flow has almost tripled. So this is very strong growth across the board. They've managed to increase their profitability relative to their earnings, so they're getting some operating leverage here. This is another strong check on metric number 2. Next up for metric number 3, here we're looking at LVMH from the perspective of an individual shareholder by looking at their company on a per share basis. So we want to see earnings per share growth over the past 5 years. As we learned in the previous metric, their earnings have more than doubled over this time. However, earnings are only the numerator in this equation, and so we also want to check what the denominator has done, whether or not LVMH has been issuing new shares and diluting existing shareholders, or buying back shares and increasing existing shareholders' ownership percentage in the business. So over the last 5 years, LVMH has actually kept their shares outstanding pretty much flat. And so by doing so, this earnings per share number is really going to depend on what their earnings have done. So their earnings have more than doubled, and their earnings per share are up pretty much similar to that rate as well. This is another check on metric number 3. Metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the past 5 years. Again, they've nearly tripled their free cash flows over the last 5 years, and they've kept their shares outstanding pretty much flat. So this is another check on metric number 4. There are a couple of other nice points that we want to mention here. One is that it's very compelling as a potential long-term shareholder in the business to see both high average returns on capital and to be able to see this strong per share growth, because those two things in combination with some of our upcoming metrics, such as looking at how the business is utilizing debt, can really be key signs that would indicate that the business is able to sustainably compound its intrinsic value per share over extended periods of time. So this is a potential sign of the business's overall quality showing up in their financial metrics here. The second is more looking at a sign of potential quality accounting, taking a very high-level overview and painting with a broad brushstroke here. It's likely a good thing that we're not seeing huge discrepancies between the business's earnings and their cash flows. Ideally, we'd want to be looking at this on a more extended time frame, probably 10 years or more, but the two of these have been pretty similar over the last 5 years or so, and we're especially not seeing a situation where they've had a lot of earnings and very little free cash flows in their business. LVMH is a strongly cash flow generative company. So those are two other nice points to mention here. Again, through our first 4 metrics, we are perfect. 4 checks, no X's. Next up for metric number 5, here we're evaluating how the company is utilizing leverage. So we don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are at the greatest risk of poor outcomes. So specifically, we want their net debt, which is long and short-term liabilities minus cash and short-term investments, to be below the amount of free cash flow that LVMH has produced over the past 5 years. LVMH ended last year with $27 billion in net debt. Since then, they've slightly increased this to about $27.8 billion in net debt. However, over this time, they produced about $51.5 billion of free cash flow. So based off of their abilities to produce those, they've got a ton of free cash flow coming into the business, more than enough to be able to healthily support this debt, pay it off in full, and then some. It would likely only take about 2 to 3 years of their cash flows to be able to pay off all of this debt. And so it looks like LVMH is using a very appropriate amount of leverage in their business. This is another strong check here, as the business does not appear to be overly levered, and we are still perfect 5 for 5 through our first 5 metrics. Our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the rate of the 10-year treasury yield and give us another reason to be potentially interested in the business. So we're using their total enterprise value because it's going to give us a more economically accurate picture of the business compared to their market cap alone by taking into account both their market cap and their net debt position. And so the picture of the business that we're going to get is going to be more similar to as if LVMH were a private company. Currently, LVMH has about a $391.5 billion total enterprise value, which is about the middle of the range that they've been at over the past year or so. And we learned that in the previous metric, over the last 5 years, they've earned about $51.5 billion. That means that in an average year, LVMH is producing about $10.3 billion of free cash flow. So when we divide their $10.3 billion of their average free cash flows by their $391.5 billion total enterprise value, that is only going to give us an average free cash flow to enterprise value yield of approximately 2.6%. So that is below the rate of the 10-year treasury yield currently, and that's about half of the 5% mark we were potentially looking for. So on an average basis of their free cash flows, this means that metric number 6 is going to be our first and only X on LVMH. Also worth considering is that over their last 12 months, they've actually increased the amount of free cash flow that they've been producing, especially relative to their historical averages. So they brought in $15.5 billion of free cash flow over their last 12 months. So to get a current free cash flow to enterprise value yield for LVMH, when we divide their $15.5 billion of their last 12 months of free cash flow by their $391.5 billion total enterprise value, that gives us a current free cash flow to enterprise value yield of just under 4%. So that is more in line with the rate of the 10-year treasury yield there, but that still is below that 5% mark we'd ideally be looking for a potential risk premium. Either way, it would likely appear that the economic reality for the business would be somewhere between where they've been at historically and where they are currently. So it looks like their free cash flows relative to their enterprise value is just about in line with the rate of the 10-year treasury yield. So keep in mind that this is just one data point out of the 6 that we've looked at so far. And just because this is an X does not necessarily mean that you're going to write this business off in its entirety. Then here we're taking a look at LVMH's dividend profile. So again, as mentioned, LVMH currently has a 1.7% dividend yield, which is about in line with that of the yield from an S&P 500 ETF. LVMH has almost doubled their dividend payouts per share over the past 5 years, and at the same time, they've almost tripled their free cash flows per share. So in all 5 of these years, it looks like LVMH especially given the fact that they're using an appropriate amount of leverage in their business, as we learned in metric number 5. Looks like they have plenty of free cash flow coming in to be able to support a healthy and sustainable dividend. And so this is really important because free cash flow is really the lifeblood of any business. And a business can use free cash flows to pay down debt, make acquisitions, reinvest back into their business, buy back shares, or pay dividends. And so by being strongly cash flow generative, LVMH looks like it's got a lot of potential to do any of those. And so again, even though this is a historical snapshot of their last 5 years of dividend performance, and it's not necessarily a guarantee for the future, if they were to continue this trend, it looks like LVMH should be in pretty healthy shape going forward. Then finally, here we're using a discounted cash flow model to come to a potential fair value for LVMH. So please keep in mind that this type of model, just like any other model in any other discipline, is going to have its outputs be highly dependent on its inputs. We're going to be using historical growth assumptions based off of how LVMH has been able to grow their free cash flows dating all the way back to 2001. So please, it's up to you to do your own homework to determine whether or not these are going to be both accurate and potentially applicable for LVMH going forward. Also, please keep in mind that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security. And before considering any potential investment decision, please consult with the properly licensed and registered legal and financial experts. If we start with the business's current free cash flows per share, and then we project a growth stage over the next 10 years where they grow their free cash flows at the rate that they've grown them over the past 20 years, so about 10.5%, then assuming a terminal stage for the 10 years out after that, where this growth rate falls in half to about 5.5%, then if we were seeking a 10% rate of return from LVMH, it looks like a potential fair value for their business would be about $553 per share. So that is down more than $150 from where the business's stock price is at currently. Then using these same historical growth assumptions, it looks like at today's valuations, we could reasonably expect about a 7% rate of return going forward from LVMH. Again, please do your own homework here. Even though this DCF has ranged from maybe modestly overvalued to approximately fairly valued, this is not a buy or sell recommendation of any security. So in summary, LVMH checks the box on 5 out of 6 of our metrics. They're earning above average returns on capital, coming in at about 17% annually. They've experienced very strong revenue, earnings, and free cash flow growth over the past 5 years. Also, they've been keeping their shares outstanding basically flat, so they're growing quite strongly on a per share basis as well. Then it looks like the company is using a pretty appropriate amount of leverage in their business, especially relative to their abilities to produce free cash flows. However, when we compare their average free cash flows and their current free cash flows to their enterprise value yield, those two together are only giving us a yield that's approximately in line with the rate of the 10-year treasury. That was where today's only X came, as they would potentially not be giving us the adequate risk premium that we were ideally looking for. However, it doesn't seem like the business is egregiously valued, as that free cash flow yield is still pretty reasonable. Then looking at the company's dividend profile, it looks like their dividend should be in healthy and strong shape going forward, provided that they're able to maintain their strong cash flows. And finally, performing a discounted cash flow analysis of LVMH, it looks like from today's valuations, you could reasonably expect about a 7% rate of return going forward from the business, and that if you were ideally seeking a 10% rate of return from LVMH, you'd have to wait for their stock price to come down by about $150 per share. That is more similar to where their price has been trading at earlier this year. It's up to you to do due diligence and learn more about the business. But if you believe those assumptions and that's your required rate of return, you would just want to be patient for LVMH. Finally, it's worth reiterating that this type of analysis is not a buy or sell recommendation of any security. It is not financial advice, and that you need to do your own due diligence before considering any potential investment decision. Instead, this analysis serves as a beginning and holistic understanding to help you determine whether or not it's worth your time and energy to dig in and learn more about LVMH. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel, as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor tailor your rating experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $99. That's only 27 cents per day through my referral link down in the description below. Normally, premium is $239, but they are currently running a general offer for $119. But if you use my link, it's only $99. So check it out if you're interested. As a value investor, you're ultimately trying to learn about a business as if you're going to own 100% of it going forward, and you can truly understand the underlying essence of that business and know what's important and what's not important for that company going forward. So through this deeper research, you'll be able to learn more about the qualitative and the quantitative aspects of LVMH, and you'll likely be able to come to your own determination of what's a reasonable fair value for LVMH. So with that said, that's it for today's fundamental stock analysis of LVMH, Moët Hennessy Louis Vuitton. Again, this business has some of the most well-known brands in the entire world. And so if you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about LVMH with me, and have a great day.